Welcome to another session of RM Smart Investing. I'm so pleased to have you. Today's what I thought as far as the topic. I want to go to the simple idea of do's and don'ts in trading futures and options. And I thought, I know most of you have the experience, and this has been things might come even to you naturally. But once in a while, a reminder is a good thing. And sometimes we fall into our old habits. And this might be a good reminder. Maybe we should get out of those, or maybe we should do more of the do's. So here we go. My 7 do's in trading, especially in futures and options. Number one, I'm a very big believer in understanding ourselves, and I put down number one, know myself. You have to know what kind of a person you are. What are your biases? Do you stick to your plans? Do you have a clear vision and why you trade? Are you decisive? When it comes to trading, you really have to be a good decision maker and you have to be decisive. And also the biases, we all have it. We have old habits. It comes from our history, comes from our environment. So it's important to know our biases. And also based on all those, we choose our markets. Not we are not made for all kinds of markets. So there are some specific markets which are characteristics, our personality, it kind of matches. So you want to understand that and make sure you emphasize on those markets. Number two, again, gotta have a plan. Do I have a plan? If I have a plan, so what is my strategy? Which strategy am I using? And based on that, what is my entry? What is my stop loss? What is my target? And what is my duration? This is something that it's not emphasized a lot, but you also want to put some kind of a time limit. I mean, you cannot be in a range bound market for a while and just sit there, especially if you're doing day trading. And by doing so, sometimes you actually losing some other opportunities. So for myself, I do put a duration. Sometimes, again, depending on my strategy, do I want to be there till end of the day, or is this like something just for a morning trade, for instance? Number three, I have to know my risk. What is my risk? What is the maximum risk per trade that I do need to take? What is the maximum risk per capital that I have? And what is my pain tolerance, that maximum pain that we call this catastrophic stop losses sometimes. It's the risk that we take. A lot of professionals do have that they look at what is the worst case scenario before I will pull the trigger. Now, I do not recommend that for all the investors, I mean, all the traders, but it is something that you want to have it clear in your mind that you don't want to go from the pain of just looking at the screen to really pain of sleepless nights, for instance. So make sure you know what is your maximum risk. Well, I have to accept responsibility. It is, there's a lot of different factors involved. You can blame the markets, blame the news, but at the end of the day, this is our business. This is our decision. So we have to accept responsibility. So that's a do. Now, the other thing is I have discipline. And when I say discipline, we talked about the trading plan. We talk about business plan, trading journal, the strategies. Do I stick with those? Or is it kind of being selective? Do I want to, based on choices, based on the environment that we are in, all of a sudden I become very selective on what plan I want to use, at what plan I do not like to use. So have the discipline. And one of the good things about discipline, and again, talking about the plans, make sure these are done before you get into the trade. And I do encourage you, please have it written. Um, you could have a, like a manifest. You can have something uh, you can apply to for all the trades, but make sure it is written somewhere so you can visually and physically can feel it. And based on that, once you have that trading plan, once your plan is ahead of time, and then we talk about, let's say, the strategies that you use, whether it's like a gap trade, or is it an earning trade, or basically is it a CPI or the non-farm payroll trade. All of those, obviously, if you've done it enough times, you have written it, you know where it is, but make sure you stick to it before. Just have your exit plan. All the plans are already done. And don't become so flexible and start negotiating with yourself while you're in the trade. As I said, just do it before when you don't have anything in the game. The minute you get in the game, all of a sudden your personality changes. And that's even more reason you have to have the discipline. Number 6 is you got to be patient. You got to make sure that opportunities come to you rather than being impatient and trying to rush into things. And um, there are times that you might not have an opportunity during the day. That doesn't mean it's a failure. That doesn't mean that you are doing nothing. Basically, you want to make sure you get the best probability, best odds in your trade of action. So basically, again, you got to be patient, and that's the number 6 too. And number 7, this might sound funny, but know how to place orders. And please double check, because what happens, mistakes do happen. I've made it even after, there've been times after the 30 years of trading. And when I say trading, not only trading in like futures and options and put like a big block of trades, stock trades, even after those years, sometimes we might be tired, we might do the wrong thing. As you know, most of you know, like I do have my, let's say our Thursday gold trades, for instance. There have been times that, my limits are not the correct way, the target that I put in. And they've been even funnier than that. Sometimes I put in a sub like buy order, I put like a sell order, and I watched it. Like, thank God I watched it like a few minutes later, and I see I'm like really happy. I'm saying, oh my God, I did it must have been a really good trade. And I'm looking at that I'm in red, then found out I put the wrong trade in. So these are more mechanical things, operational things, but please double check. And there is a reason these platforms, let's say TradeStation or Thinkorswim or TradingView, they do have a double barrier. So after you put the trade in, they ask you to review it and make sure you pay attention to that. So again, there are many others. I can think of perhaps maybe 20 do's, but these were my 7 top do's. They're simple ideas, and they do apply. And as I mentioned, in the futures market and options market, you could even do it on a stock trading. But mainly this is for more of a shorter term trades. When you think about like a longer term investing and trade, you could be, not as decisive. For instance, you could be even more patient. But here you really have to have a lot more discipline, for instance, because when you do have a long-term investing, even if you made a mistake, even when you do, actually, I just mentioned about placing orders, you do have some time to correct it. When it comes to short-term like trading, your window of time is very short and narrow. So let's discuss 7 don'ts, the things that you should not do. And I start again myself. And when we let emotions get in the way, And that's one of the reasons, like a lot of people, they like to do maybe system trading, because at that moment, it is all about the setup. It's all about what the trade is going to do. You're we talked about having a plan. Your plan is in its place. So really, at the moment, you do not have the, let's say, the fear moving in, for instance, or let's say you already had a target, you have your stop loss already put in, and all of a sudden you start negotiating with yourself, saying that, oh, you know what, my target was, let's say in options, I was going to take a profit at 25%. That 10% looks good, let me do that. So basically, as long as everything is set the way that you have set it up before getting to trade, do not let the emotions get in your way. Number two is letting a winner turn into a loser. Now, these are more of a discretionary, and we see that, and that's more of a greed sometimes plays a role. And this is the time that what you want to do, and it goes back to your discipline, and it goes back having a plan, is when, if you do not put targets in there, and for whatever reason you get greedy and all of a sudden you want more, then at that moment, this is the time you should pull the trigger, because there are times that uh, although everything looked good and you think things are going to continue, uh, the minute things turn around, use your again, use your discipline, use your setups, and don't let them turn to losers, because those losers become bigger losers, because then at that moment you become more of a prayer rather than player. So you're just praying and you're thinking that the things are going to turn around again. As far as this is another, unfortunately, mistake that a lot of traders do, is, especially again, we're talking about short-term trading, they start negotiating with themselves, they letting their trade to become become investments. And the reason to do that, they justify their actions, or in this case, let's say I justify my actions because, let's say my setup was based on 30-minute or on a 15-minute chart, and everything, let's say I used Ichimoku or whatever setup or strategy that I use. When the things go against me, all of a sudden you say, you know what, I was just looking at the daily chart, and this thing is going to turn around, and I have time, I can do it, we can wait 3 days, 3 weeks. And remember, your setup is supposed to be prior to your trade, not during your trade. So please, this is something I've seen often, that all of a sudden, again, we start negotiating with ourselves, and our day trading becomes an investment and becomes investing. Number four, adding to my losing trades. Now, justification is, oh, my setup was good, I know it's going down, and you kind of forget about your stop losses. You manually come back, and you come and kind of lower your stop losses to justify. And not only that, you start adding to their losing trades. Now, there are some professionals that they've been around for a long time, so they can do that. We call them pyramiding. They add to their positions because they look at the big picture from their point of view, because they have a large portfolio. But generally, if you add to your losing positions, majority of time it backfires. Now, you can justify it by, let's say, oh, I'm dollar cost averaging, but in reality, you're just multiplying your losses. So just be very careful on that. Again, there are a few times you can justify for that, very, very few times. Well, let's say there's a big support, and let's say there was a false breakout, and that you've done enough trading. But generally, please don't add to your losing trades. There's always another train, another bus to catch. There's almost 24 hours a day trading. So if you made a mistake, get out of it, start fresh. It's only one trade away. So The most you lost was your stop loss, and then if you were right to begin with after you got out, and once you get the confirmation, then you can always get back in. Number five, it's important, and unfortunately, as much as we try to avoid it, majority of traders fall in this. A lot of investors do, is trading on rumors or tips, and with no really foundation, just because somebody said that, or maybe social media. Um, uh, uh, you better avoid that, and that goes back to your own discipline, your trading plan, your business plan. You know who you are, and based on that, because of all the accumulation of all those characteristics, you really don't have to worry about rumors or tips. Now, there are times that you will see something comes up and you can maybe investigate it, but just blindly going and buying something because somebody said or social media said, it is majority of time it's very harmful to your profits and your capital. Number six, trading for the sake of trading. Now, this is something, again, we've talked about trading as a business, and unfortunately, when we think about trading, we kind of equal, we look at it as a business of it based on hours. We think that if we don't do something, we don't deserve to make money. So we equate the number of hours that we trade with the relevance of getting profit. No, if you do the things right, and we've talked about AN, like when the CPI numbers comes, or non-farm payroll, or some of the things, in 1 minute you can make as much money as somebody makes in a week. So it's not about the timing, if it's about your strategy, knowing what to do. So not trading is actually strategy, and it is important to know when to trade and when not to trade. So please don't be fidgety and just say, oh, I got to get into trades. Today I didn't do any trade, and it goes back to being a patient person. That's the do, and don't be impatient. So it's important to know that it's okay not to trade. And number seven is not learning from mistakes. Now, this might sound really basic and simple, but it's the human habit and nature that we do things that we think we learn from them, but we get back to this, as I said, like the old habits, and then we create excuses for what we did. One of the simplest things, obviously, is moving our stop losses. Start again negotiating with ourselves, thinking that, oh, you know what, this time is different. This time, because Powell was wearing, this time was wearing a blue jacket rather than a black jacket, so something must be different. Or the other big thing is, and I put down not taking action, is we look back and we made mistakes, maybe jumping in the gun too fast, and we talked about not being patient. But also there are times that we should pull the trigger, and we got to learn from the mistake that we didn't get into action. So it is important, actually, if everything is lined up, taking action is also important. So there's nothing going to be perfect. There is no 100% trade. There is no 100% profitable trade. So basically, if you are, again, this is a game of probability. If you're convinced that this is a good trade, your setup is right, now you got to take action. Unfortunately, by delaying, and this is opposite of, in a sense that we said you got to be patient, this is sometimes you have to take action. And if you're wrong, that's why you have your setups. That's why you have your stop losses. But majority of time, if you've done it enough times, you've learned from your experiences, again, nothing is 100%. As long as you have a good probability win ratio, then I would definitely ask you to pull the trigger. So this class was, again, a short and sweet reminder of the things that to do and not to do. I'm sure you're familiar with most of them, but unfortunately, again, human nature kind of likes to wander around and look at something new, for instance, and forget about what has worked in the past. So with that in mind, I thank you so much for, again, attending another session with RM Smart Investing. I'm gonna stop recording and open up for any questions that you have.